Hello guys, welcome back to a new episode, RALLYTOP Investing 3.0 SMC Masterclass here. In today's episode, I want to share with you a very powerful candle pattern that has been helping me tremendously to make consistent profits in the market every single day. Now, this candle pattern is a two candle formation, and you need to master it like the back of your palm if you actually want to make the difference in your trading. Now, there are simple rules that you need to follow. The first rule is this: if market is in a bearish structure such as this, price is printing lower low, lower high, lower low, lower high, lower low. Now, you want to see this two candle formation here. And what is the two candle formation? It is that this candle, this bearish candle, has to print the lowest low. Please take note. Bearish candle has to print the lowest low. And now the next candle must be a bullish candle that closes above the high of that bearish candle that printed the lowest low. That's the catch. Some people can call this engulfing candle. It doesn't really matter. The name or the nomenclature does not matter. What matters is the psychology behind this two candle pattern. Okay? So once you find this two candle pattern, it has to be on the higher time frame first of all. You need to find this candle pattern on the higher time frame. Your higher time frame can be the 15M. Can be the 1H, can be the 4H, can be the daily time frame, but it has to happen on the higher time frame. Now, once you find this two candle formation, you will know that price is about to reverse. This two candle formation is a strong reversal signal. You will know that price is about to reverse, and therefore you can position yourself to now start going long from here. Okay? And as price is going higher, now you need to always take advantage at the low. Every time price pulls back, look at the low. If you find this two candle formation, take price from the higher. You find the next pullback, the low of the next pullback, you find this two candle formation, you continue to stack on the trades. The same thing if price is in a bullish structure, and then you find a bullish candle printing the highest high, and after that highest high you find the second candle being a bearish candle that has to close below the low of that bullish candle that printed the highest high. Okay? Once you find this pattern, you have a good idea that price wants to reverse from there, or at least retrace from there. So you want to start looking for opportunity to go short. And you must take note, as price is printing lower low, lower high, lower low, lower high, as it's pulling back, you want to find this candle pattern at the high of each pullback. As price is going down, you want to find at the high, you want to find at the high this candle pattern. Now, how do you trade it? The way to trade it is that once you find this on the higher time frame, and you must know your time frame combo. If you are using the 15M as your higher time frame, then the 1M or the 2M will be your entry time frame. If you are using the 1H as your higher time frame, then the 5M will be your entry. And if you are using the 4H as your higher time frame, then the 15M will be your entry. In this case, I'm using the 4H here as my higher time frame. So I find this pattern on the higher time frame first of all. Once I find the pattern on the higher time frame, I go down to my 15M. What am I going to do on the 15M? I wait for internal chalk. Once internal chalk is taken out, I now wait for inducement, and boom, I take my trade from there. Simple. Let me take you to the live chart and show you one or two examples. I've already marked it out. Now, take a look at this. This market is clearly in a bearish structure here. As you can see, it's pretty much bearish. Price is dropping. Now, take a look at this. So price printed this pattern that I told you about. In a bearish structure, price is making lower low, lower high, lower low, lower high, lower low. Okay? In a bearish structure such as this. Now you find, now let me make one more thing here, one more clarification here. Now you see, there are times that this two candle formation that you see has a middle candle. There are times you find a middle candle in between, making it three candle formation. Now that middle candle must be an inside bar. It mustn't be a candle that wicks above this bearish candle's high. No, it mustn't. It must be contained within this bearish candle high and low. Okay? And in that case, that inside bar candle is insignificant. So sometimes you find that kind of formation also in the market. The same thing with this. You can have a middle candle here, but that middle candle must be an inside bar. So now let's get back to the live chart. So I'm telling you that this is the type of candle, the pattern I showed to you here. If you go back and see this pattern, that's what I showed to you there. All right. Now in this case, it is three candle. This candle, this is the black candle that printed the lowest low, and this next candle is an inside bar, as you can see. Now the third candle closed above this black candle that printed the lowest low. Now it mustn't be more than two candles after that black candle. It mustn't be more than two. If you find anything more than two, please avoid taking the trade. And secondly, this candle that must break the high of this black candle mustn't be this kind of momentum candle. You don't want to see this type of momentum candle. Okay? You want to see something like this. All right? This is ideal. So once you find that, this is the pattern. How do you trade it? Now let me show you how to trade it. Let me take out price from here so I can show you how to trade it. This is the candle that took out the high of this black candle. So once you find this pattern on your higher time frame, I'm using the 4H as my higher time frame. So I will need to scale down to the 15M. Now this is the 15M. This is where we are on the 15M. So the first thing is for you to identify your internal chalk. And where is the internal chalk here? Your internal chalk is here. This one. Okay, so price takes it out to confirm this low. Now let me take this one out to clean the chart. Now, so price took it out, all right, to confirm this. That's your internal structure chalk. After that chalk is taken out, you need to wait for inducement to be taken. And where is the inducement here? Your inducement is right here, guys. Once price takes out that inducement, where is your area of interest here? Well, as you can see, everything is mitigated. Everything here, as you can see, is mitigated. Now, in that case, what do we do? Well, if price takes out this inducement, if it weaks this inducement and gives us confirmation to go long, we go long from there. Simple. So let's continue to advance price. Okay, as you can see, price has taken out this inducement. I want to think so. Yes, price took it out slightly with a candle closure. After taking out with a candle closure, you need to understand this very well. After taking it out with a candle closure, now, what stops this candle from coming down after it closed below this inducement zone? Why can't this next candle come down and continue to go down? Why did it have to now come down and then retraced on this candle? And at the end of the day, it closed bullish and then took out this candle's low. Why did it sweep it? This is liquidity sweep. And after that, look at the next candle, closed above this candle. This is a powerful three candle formation pattern. Powerful pattern for reversal. I've discussed on this pattern several times on this platform. If you have been following me for some time, you will know that I've been talking about this pattern. Now, so what do? Well, you mark out this candle here. Mark it out. That becomes your zone to take price from. But you cannot take price directly from here, okay? Because there's no form of confirmation. You need to wait for confirmation. Now, there are two ways you can confirm this zone. Number one is if it takes out this high. Number two is for you to go back to the lower time frame. All right? Go to the lower time frame and wait for confirmation. And in this case, I want to choose going to the lower time frame. In this case, the 1 minute to wait for confirmation. So I go to the 1 minute straight away. Now, this is that zone on the 4H time frame. Now, let's analyze this one here. As you can see, price printed this low, okay? And this is our inducement taken out. And then printed this high, dropped, went up, and eventually printed this high. For this high to be confirmed, it needs inducement. And so where is the inducement here? Well, your inducement is right here. Your inducement is right here. So once price takes out that inducement, this high is confirmed. And after taking out inducement, where are your areas of interest? Now, on the 1M, remember this is the 15H area of interest, okay? And already price has even come back to tap into it. So it's now mitigated. We cannot actually use this one now. So we want to look at the 1M. After taking out inducement, if it takes out inducement, now this will become our area of interest. This one is our area of interest. Okay? Clear area of interest. Now, let's continue to advance price and see what happens. Okay, so price has tapped into that zone now. We want to take trade from there. So we can frame this trade. But first of all, let's get back to that 15M. Let's get back to that 15M and know where we should have taken our TP from. Now, the first zone we should take our TP from is here. That's our TP1. Now, TP2 is here. Where is TP2? This zone. That's our TP2. And then, where is our TP3? I think that's all. Okay? That's our final target. So we get back to that 1M. So we can frame this trade actually from here to go long. Our TP, where the first TP is here. First TP is here. Stop loss is right below here. Give a buffer. Okay, so if it goes our way, it will go give us 4.64 R. 4.64 R. That's our first target. And then we can now take it to the second target. But let's continue to advance price and see what happens. Boom, our first target smashed. Okay, so we now take a look at something here, guys. This is where traders will get shaken. They will get shaken out of the market because they think, okay, after the first target, price is dropping massively. Okay, no, you don't need to be shaken out of the market. You have done your analysis, so wait, be patient. All right, so but you need to trail your stops. That's what you need to do. Once it takes out this first TP, you can move your stop loss to break even, so that if price comes back to take you out, you have nothing to lose. So we continue. We are waiting for it to go and take out our TP2, which is our final TP. And as you can see, price is retracing massively, even back to where we were. Can you see that? is testing your patience. You have nothing to fear. Look, let me tell you, we are still in the trade. Maybe you think we are no more in the trade. We are still there. Let me show that to you. As you can see, we are still in the trade. Very much in the trade. Okay, so we continue. If price comes back to this zone, if you have the NAV, you can add to position, but I don't want to confuse you with that. Remember, our zone, our target is still here. It's still here. Our final target is still there. Now, let me get to the 15M so that it can be faster. Yeah, it can be faster here. We don't have time to waste. Okay, boom, second target smashed easily. So, look at the massive profit we would have made here. So now let's get back to the 4H and see what is going on. Let's see whether we can have one more opportunity. Let's just see whether we can have one more opportunity on the 4H. Now, you may be wondering, why is it that I'm not taking this? Now, this didn't meet our rules. This candle is supposed to be a bullish candle, not a bearish candle. It didn't meet our rules, and this is too much a massive drop on this one candle. That's not what we want. Remember, this is 4H, this massive. If you go to the lower time frame, okay? So that's not what we want. We continue. Okay. So we now have that same pattern here. Look at that same pattern. This black candle prints the lowest low and the next candle closed above. Once we find that, then we go to the lower time frame to take trade. This is where we are. So we go to the 15M now to see whether we can have an opportunity. Okay, now on the 15M, the first thing you need to do is to identify your internal structure chalk. And where is your internal structure chalk? Right here. Right here, guys. That's your internal structure chalk. And after that, you need to wait for inducement. Let me take this one out so that it doesn't confuse us. So you need to wait for inducement. So let's continue. So as you can see, this is high. This high is higher than this previous high. And so where is the inducement here? Here is your inducement. Right here. And as you can see, price took out that inducement. After taking out that inducement, where is your area of interest? Well, your area of interest is this one here. This one. This is your area of interest. Okay, so as you can see, price is coming into it, and we don't know whether it is going to hold price. But let's see. Let's continue. Okay. Okay, so let's see. But this area of interest is massive. Okay, this is massive. Can we go to the lower time frame and see whether we can do something about this? That's what we ought to have done initially. Let's get there, because that area of interest is just massive. It's just massive. Let's see whether we can have some refinement here. Let's start from the low here and see whether we can have some refinement. Everything here is mitigated. This one is mitigated by this. This is mitigated. This one is mitigated. This is mitigated by this. Okay. Okay, but we have this one that is unmitigated here. This one is unmitigated. So we can actually use this, but let your low be low, below that low. That's number one. This one is already mitigated. This one, is it mitigated? Let's see. Let's see. This one is already mitigated. How about this one? Is it mitigated? It's already mitigated, so we can't use that. So let's continue to see about this. Is this mitigated? Yes, it's already mitigated. Everything is mitigated. About this, is it mitigated? This, no. We have another zone here, guys. We have another unmitigated zone here. Okay, but let your stop loss just be below. That's another zone. In between, we are trying to refine. Now, how about this? This also. But, okay, this also. This high is higher. This is our order flow here. Okay, let's just see. So these are the three order flows we have here. Okay, so let's stretch it out and wait for price to come and tap into any of them. Then we go long from there. So this one has been violated, so we can't use that. How about this? Has been violated as well. We can't use that. How about this? Is the extreme. Let's see whether price is likely to come to this extreme. I don't know. Let's continue. Otherwise, we could have taken our trade from this 15M, I mean this one 15M zone. Okay, would have taken our trade directly from there. I don't know. Okay, so price is not coming to that zone, and it started going higher. All right, but price came into the 15-minute zone, and which is completely fine. Let's continue to see. Now let's get to the 15M to make it faster. Let's get back to that 15M so we can make it faster. So price didn't come to this our refinement, but price tapped into this zone and started going higher. So price is going our direction, and where would be our target if we take it from this 15-minute zone? If we took it from this 15-minute zone, where would be our target? Well, the first target would have been this one here. This one. And as you can see, it would not have given us anything good. So we wouldn't have taken this first target. It wouldn't have given us anything good. So instead of that, we look for the second target. Where would have been our second target? Our second target would be here. This one here. Okay, this one will be our second target. So, and then our third target, because you need to trail your stops. Our third target will be here. Okay, and then our final target will be here. To be there. So these are the three targets we'll look at. So now price is going in our direction. If we wanted to frame this trade, this will be our first trade. Just a minute. This will be our first trade. I mean, this will be our trade, our first TP just here as our first target. Our stop loss just below. Okay, so that will give us 1.42, and then our second TP will be here, and that will give us how many? 2.39 out. So let's continue to advance price and see what happens. So first target has been achieved. First target has been achieved. So we are waiting for the second target, and after that second target, we wait for the third target. Okay, second target achieved. So we can now go for the remaining, this third target here, our ultimate target. Okay, and so let's continue to advance price. And almost boom, that's our third target achieved. Okay, so that's the second trade for you guys. Well, let me give you one more. Let's get back to the 4H. I don't want this video to be too long. Let's get back to the 4H here now, and let me just show you the final trade. Maybe the 2 is even enough for you to go and practice on your own. Okay, let me see whether we can do one more. But guys, I want you to know why we're waiting to do one more, to look for one more example to do for you. Please, if you haven't subscribed to our YouTube channel, please do so just immediately, and turn on the notification so that anytime we publish a new video such as this, you'll be notified about it. And we have a free Telegram community that you can join. There we post, sometimes we post high probability trade setups, so you can take advantage of it and become part of our trading community. Okay, and if you want to learn how to trade effectively, you can actually become part of our VIP community. So please take advantage of these offers and do yourself good. Learn how to become a profitable trader. So we are waiting for price to come give us another opportunity. If you have any questions concerning this strategy, please don't hesitate to ask in the comment section. Just send your questions. Whatever you want to know, just send it to the comment section. I attend to all the questions that are sent to me. Okay, so don't hesitate to do that, and tell me the next video that you want to see so that I can get prepared for it. Okay, so now we are here. We have gone a little far. Let's take price out from here. Now this is the same pattern. It's the same pattern. Look at it. It's exactly the same pattern. This is the black candle, printed the lowest low. Remember, this is a pullback, and this is the base of the pullback, printed the lowest low. Once you find these two candle formation at a pullback, then you will know that we are about, okay, to continue or to resume the predominant trend. Now, after this black candle printed the lowest low, this next candle closed above. So this is our pattern on the 4H. We want to get to the 15M now, and then wait for our internal structure, our internal chalk. And as you can see, that's our internal chalk. Let me take this one out so that it doesn't confuse us. That's our internal chalk, and then we want to wait for inducement. And where is the inducement here after chalk? Well, as it stands, is there any inducement? I think this is inducement. Yes, this becomes your inducement in the market, guys. Let's see. That's your inducement. An inducement is taken out. After inducement is taken out, where is your area of interest? Well, this becomes your area of interest. Look at this. Look at this. So this becomes your area of interest from this to this point. It becomes your area of interest. But let's see whether that will work out. And let's continue to play price. I hope you understand what we're doing here. Please try and understand. Very important for you to understand. Okay, so look, it appears we are out of the market. Let's see. No, we are still there, just a small wick. I'm sure you, if we frame this trade, we'll give a buffer to our trade. Let's see. Let's frame it. We want to go long. Okay. And our TP is where? We need to find out where our TP is. But let's first of all do our stop loss. Let's do our stop loss just below. Give a buffer to your trade. Okay. It's a small zone, so give a buffer to your trade. And where is our TP? Let's get back to the 4H and be able to identify the TP here. So the first TP will be this one. If it goes our way, that is going to be the first TP. And the second one is this one. This is the ultimate. Okay. So we go back to that 15 minutes and play price and see what happens. So we first of all put our TP here. Our first TP is here. Okay. After that TP is chief, the second one is here. We continue. Okay. So first and second TP smashed. We are still in the trade here. I hope you understand. So first and second TP smashed. So that's the way to use this very strategy. Simple and straightforward. Please go over this video again and again, and then you will master what we are talking about. All right, guys. I see you in our next educational video.